What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we continue to see more volatility and more selling across the board in the indices. Is this correction ending, or do we still have another leg lower to go? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 1.29% and we're closing right next to that support level just below 429. So remember, it's very likely that we're going to see SPY coming down to our support level at 425 before we can say this correction is likely coming to an end. Right now, we have to remember that we're in a downtrend until we're not, and if I switch this over to a 1 hour chart, you can still see that we're below our resistance trend line and we're still forming lower highs and now lower lows. So until we break this downtrend, the path of least resistance is still lower, but it is possible during a stock market correction to start accumulating on the way down because you never truly know how deep a stock market correction is going to go. So if you're buying the stock market at these levels, just know that we are in a downtrend and you're taking on extra risk, which some people are okay doing. As long as we're in a downtrend, you need to be cautious because anytime one of these support levels breaks, it does mean we could go to the next support level lower. By far, the most critical support levels to pay attention to will be 425, 419, the gap close at 411, and then the support down here at 404. If we don't break the downtrend, you have to assume that we're going to continue to make another leg lower every time we blast through a support level. So if we lose this support around 429, you're looking for 425. And again, if we lose 425, you're looking for 419 and etc., etc. Now, as long as we have the downtrend, that's going to be the path of least resistance. If we break the downtrend and we can see SPY breaking out of this downward resistance trend line, we could start to snap the downtrend and start getting back on the bull. Now, the most important thing to look at for the bull market is the weekly chart of SPY. And we can see starting out the week, we're off to a horrible start for the bulls. And we're currently in the process of losing the bull trend with price action below our positive sloping 20 simple moving average. So this is what a market rollover will look like. But again, it's just Monday and this is a weekly chart, so we can't judge SPY on a weekly chart until the closing candle on Friday. If SPY can rally and close above 436 by the end of the week, the bull market is still intact and we could go to brand new all-time highs. But by the time you know we're going to continue to sell off on the weekly candle, we could have went much lower. So you don't want to trade in the short term looking at a weekly chart because it is a much more longer term macro scale. But on the macro scale, we can definitely see we're losing the bull trend with the price action below critical support. And the next strong support level on our weekly chart is way down here at 407. So be aware of this, but do remember this candle has not yet closed. And if we close Friday above 436, this is invalidated and we're still on that bull market trend in the macro scale. So now that you know the hourly trend is down and you know that the weekly trend is also losing the bull trend, and you can see here the daily trend is also going bearish. If we get that 20 simple moving average crossing below our 50 EMA, we will have the full bear trend. You can see that this market is definitely looking a lot weaker, and that's why you don't want to take on too much unnecessary risk. At some point in the market, you need to get through these stock market corrections, and remember, we're very well in a stock market correction right now. It's just a matter of how deep is it going to go. So watch those key support levels that I gave you, and remember, this is going to be a long and drawn out process, so you need to have a lot of patience. You can't just buy at one of these support levels and expect to be at brand new all-time highs in just a couple of weeks later. There's a lot of damage for the bulls to repair, and right now the bears have the advantage with the trend being lower, and we are forming lower lows and lower highs. So when you ask the question, is the correction ending, you're going to need to see a very decisive bullish breakout. And don't forget, we do have the gap to fill above, which is all the way up there at 441.9. If we fill that gap and we keep going higher, the bulls are back in control and we could start seeing this downward trending coming to a close as we go back into a bull market. But until we see a decisive bullish breakout, we cannot get overly bullish on this market, and we will need to see SPY breaking back above 436 and then eventually getting back over our 50 EMA up there right around 440. Until we break back above the 50 EMA, there will be bear raids at resistance and people will continue to sell and short this market. Just like in a bull market, you want to buy the dip. In a bearish trend like we currently have, you're going to see people selling the bounces, and that's why we're going to continue forming lower highs. So be very patient in this market, and on SPY, you will want to watch resistance at 433, 436, and 440. Above that, we're looking a lot more bullish, and we could close the gap at 441.9 and then continue to possibly go even higher. But right now, there's a ton of resistance above, and the trend is definitely in the downward direction. and we're even losing the bull trend on the weekly chart, so just make sure you're fully aware of that. On the NASDAQ 100 triple Qs, we were down 2.1% today, and we do see the triple Qs holding onto that support trend line just above 352. Don't forget on the triple Qs, we also have a gap to fill way up here right around 368. And that will very likely get filled. It's not a matter of if, it's just a matter of when. Now, if we lose this support level right around 352.5, it is very possible we're coming down to the next support level at 347, and below that we're coming down to 342. So watch that key support level, and you can see a very nice ABC pattern forming here on the triple Qs. And it does look like this C wave has gone the full length of the A wave. And this is a very textbook correction looking pattern with a typical ABC correction. So the fact that we're holding above support and we have a very nice ABC pattern on the triple Qs and we're currently sitting on a strong support level does mean that the bulls could try to rally from here. Now, if the bulls attempt to make a rally and they get rejected at our resistance trend line, we're very likely just going to make another leg lower as we continue into this downtrend. So right now in the short term, sitting on strong support and finishing out a possible ABC correction, we could start back into a bounce, but you still need to be cautious of every bounce because it could just be another lower high before we form another lower low. So right now, if you're bearish, do know that you're trying to be a bear right on top of a very strong support level, and it's possible we see the triple Qs rallying back up to about 360 to 365. Above 365, we're likely closing that gap at 368. And then we will be looking a lot more bullish above that gap because we will be back above the 50 EMA. So above 368, the triple Qs will be looking a lot more bullish. But as long as we're below about 365, it's just another lower high, and we're very likely going to continue to make the next leg lower. So watch those next legs lower at 347 and 342, and watch for the bullish breakout above 365 and closing the gap at 368. Just like I told you with SPY on the weekly chart, you can see the triple Qs are rolling over and we're losing the bull trend, and we currently have the price action sitting below our 20 simple moving average on this weekly chart. Again, it's just Monday and we haven't yet closed this candlestick, so the triple Qs need to close the week above 361 to maintain the bull trend on the macro level scale. If we can close this week above 361, that will be extra bullish and we could eventually go back to new all-time highs. Otherwise, we're very likely coming down to the weekly 50 EMA, which is down here right around 333. On the Dow Jones, we were down 0.92% today, and again, we see the very similar story with the full bear trend and the price action below all the moving averages, and we do still see the Dow Jones holding above the support at 339. Remember, the key supports on the Dow Jones are 339, 336.76, and then the gap close at 332, and the key resistance will be above at 341.8, and our 50 EMA right around 348 and the gap close. Now, if we can get back above 348, the Dow Jones will reverse the bearish trend and we could go back into a bull market. But as long as we're below that gap at 348, it's just another lower high as we continue to make another leg lower. So as you can tell, all three indices are rolling over and we are developing a lot of bearish trending. So this is not a market that you're going to see snap back to brand new all-time highs very quickly because there's a lot of damage repair and there's a lot of bearish momentum that needs to be reversed. In the Russell 2000, we were down 0.91% today, and again, we see the Russell 2000's price action closing below all the moving averages, and we do have the full bear trend. So again, you're seeing the same story across the board, and right now, the critical support levels on the Russell 2000 are 219, 215, and 212, and below 212, we could see the floor fall out as we go much lower. The key resistance level to break above would be 222 and 223.7, and we really need to see the Russell 2000 breaking out above 227 to start seeing a bullish breakout. Anywhere in between is just a choppy sideways move with the bearish momentum building up and eventually will take over if we start to lose critical support at 219. On the Arkk ETF, we were down 3.57% today, and remember that we did have a confirmed double topping pattern on the Arkk ETF, so we are looking for Arkk to come back down to 102. It could be a bumpy ride on the way to that price target, and we could still see another lower high before we come down to that price target at 102. So don't get faked out by a bounce in Arkk because we still do have resistance right around 112 and 113, and we could see a rejection from that level to finish out this double topping pattern. And eventually when we get to 102, we could then become more bullish if we do see a strong bounce off of that level. So right now we did have that confirmed double top, and we did confirm and break that neckline. So this is a pattern that is very likely going to play out, and I wouldn't expect to see too many Arkk bulls until we at least get to 102. So look for that pattern, but if we do start breaking out above 115.5, we could invalidate that pattern as we see the price action breaking back above the neckline, and then we could see Arkk starting to build up some bullish momentum. So as long as Arkk is below 115.5, you're still looking for this price target down here at 102. On the VIX, we were up 8.56% today, and again, we still see the VIX in a full bull trend closing above 20, so there's no reason to believe that the stock market correction is over at this time. Remember, for the stock market correction to be over, we need to see the VIX closing below 18.2, and the start for that to happen is a close below 20. So we really need to see the VIX getting back below 20 to start getting bullish and starting to think this correction could be over. As long as the VIX is closing above 20, this is a volatile stock market correction that can drag out, and it can go on and on and on for many weeks or many months before we finally find a bottom and we see the selling slowing down as we see the bulls start to take back over. So the VIX right now is telling you to expect lower prices until we see the VIX getting crushed back down below 20. On Bitcoin, we're currently up 1.37% today, and we are seeing Bitcoin looking very bullish. And remember that Bitcoin trades 24/7, so it could be leading the stock market higher. Remember that Bitcoin was in this correction, and it already does look like we went through this ABC, and we're starting to see Bitcoin with a really nice impulsive rally. So is Bitcoin leading the way higher and the stock market is about to follow suit? Only time will tell, but as you can see, you did have a very nice ABC pattern, and Bitcoin is now breaking out to a new daily high. So if Bitcoin can close at a daily high above that B-wave bounce, we could see another bull rally in Bitcoin that could break out, and we could see new all-time highs this year. I'm sure the stock market would follow suit, so you could watch Bitcoin as an indication of risk on, and if we see Bitcoin going bullish, there's no reason to believe that the stock market is going into a bear market. So this is a very risky indicator, and I'm not telling you to put a lot of weight on it, but it is looking like Bitcoin is getting bullish at these levels. If we get the confirmation breakout and form a new high above 52,000, we could easily see Bitcoin start running back up to about 58 to 59,000. If we break back below 45,000, this could just be a false bounce, and we could start heading back down towards our critical support at 37,500. But as long as Bitcoin is trading above 45,000, it's looking a lot more bullish, and we're very close to having the full bull trend, so Bitcoin is looking bullish at this time. On Amazon stock, we were down 2.85% today, and we're back to that support level I told you to expect at 31.86 as long as we're trading below 33.11. I would not get bullish on Amazon until we can get back above 33.11 and then hold above that level, because that is very likely meaning we're going up to close these gaps at 34.52 and 35.80. As long as Amazon is below 3,300, I think you need to be a lot more cautious and do not get faked out by a lower high bounce that could send Amazon for that next leg lower. So like I'm showing you across the board, there's a lot of sectors and there's a lot of indices that are going into these downtrends, and you need to be cautious of bull traps because these will be lower highs as we make another lower low. So you need to see Amazon breaking and holding above 3,300 before you get bullish, and we still will have resistance at 3,400. If we break below 31.85, look for support at 31.36. On Tesla stock, we're still looking bullish with Tesla going up 0.81% today and attempting to break out above that price target at $800 yet again, but getting rejected. The price action is still above all the moving averages, and we still have the full bull trend. And if we break out above 800, look for the next price target at 825. Critical support is still 765, 759. Below that, we still have strong support at 732. And below 732, it could look like Tesla is rolling over and going into a correction. But right now, Tesla still looks very bullish. And as long as Tesla is trading above 732, I think you need to stay on the Tesla bull because we could reattempt to break out, and we could possibly attempt to break out to new all-time highs. On Apple stock, we were down 2.46% today, and it looks like Apple is very close to closing that gap at 137, which I would expect to be a very strong support level. It looks like Apple is finishing out this ABC correction ever since we hit that price target up there at 157, and as goes Apple, usually goes the rest of the market. So as you can tell, Apple looks like it's very close to completing this correction and closing that gap below at 137. If we see a strong impulsive rally off of that gap close support, that could help put the stock market back into a bullish rally, and we will need to see Apple breaking above 145 to get bullish on Apple yet again. We'll still have resistance at 142 and 145, and above that we'll very likely have resistance right around 150. So watch for that possible strong bounce on Apple stock once we do close that gap at 137, and below 137 we're going much lower down to 133. On the financial sector, we're still looking bullish in the full bull trend with price action above the 20 simple moving average, so this could be a buying opportunity in the financial sector before it breaks out and goes for another leg higher. The industrial sector is still looking bearish with the price action below all the moving averages, and we still do have the full bear trend. The healthcare sector is also looking bearish and very close to having the full bear trend once our 20 simple moving average crosses below the 50 EMA. There's nothing on this chart that screams buy, and we do need to eventually see a strong bounce and break back above that 50 EMA to prevent the healthcare sector from going into a bear market. The energy sector is still looking bullish, going up 1.63% today and going into the full bull trend, which does mean that the energy sector is a buy the dip opportunity as we bounce off of any of these support levels below. So jumping back over the S&P 500, we can definitely see there is a lot of weakness in this market, and we see a lot of the indices and the sectors are rolling over and developing some bearish trending. We're in a downtrend until we're not, so don't get overly bullish on this market, even though it is possible we could be finishing out this correction in the very near future. You don't know the correction is over until we see that confirmation of the bullish breakout, so if you want to take on extra risk and you want to accumulate for the long term, make sure you're using these critical support levels and setting your risk accordingly. Remember, you never know when the bottom is until we get a bullish breakout of the downtrend, so you need to be patient and you need to stay disciplined. If you're trading this market, you can buy on support and sell at resistance, or short at resistance and cover at support. Stay disciplined and have a solid trading strategy, and make sure you fully understand all of your entries and exits. Also, don't forget that I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and now is a great time to be a BANC member with all of this market volatility. I'm currently running a 50% off promotion code for your first month, so now could be the best time to try out BANC Trade Alerts. You can find out all of the details and how to join by clicking on the links in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.